how much Ethereum would it take to retire in 2030? Let's break it down. Before we can figure out how many ETH you would need to retire in 2030, we have to have first a general idea of how much it would cost to retire. I'm going to do all of these calculations in US dollars and using US statistics because you'll probably be able to retire in most countries around the world if you can afford to retire in the US. Also, it's important to note that I'm not literally saying that anybody should try to retire exclusively off an investment in Ethereum, and certainly diversification in retirement is important. But this is a thought experiment, and I think it would be interesting to see how many ETH it would take in theory. Now, statistics show that the average household spending per month in the US is around $5,000 per household, with an average of 2.5 people in that household. But we can't just take that figure and then apply it to 2030 because, of course, there will be some inflation between today and when we want to retire. Now, inflation last quarter in the US was 7%, but historically it's been closer to 2 or 3%. So if we assume a slight uptick in inflation between now and 2030, hoping that the Fed can actually get things under control at some point over the next couple of years, then we can put a 4% per year inflation rate for the next 8 years. And according to that, the average household spending in 2030 would be $6,800 per month, or on an annualized basis, that's $81,600 per year. Now, I'm trying to make this estimate of how much it would take to retire relatively conservative, so then when we try to figure out the number of ETH that it would take, we have a bit of a margin of error there. I think it would definitely be possible to live on less, especially if your household is less than the average of 2.5 people. But even if you had that many people in your household, I think if you were a little bit frugal, you could certainly survive off of less than $5,000 per month in today's dollars, or $6,800 per month in 2030 dollars. So the average length of retirement in the US is only 18 years. But of course, I think we all want to retire a little bit early and enjoy the fruits of our labors. So let's assume that we're going to spend 30 years in retirement. That means we need to cover 30 years worth of expenses, and at the 2030 dollar rate of $81,600 per year, that's a grand total of $2,448,000. Now bear with me here because we're almost through this, and then we can move on to how many ETH it would actually take to retire. But before we can do that, we need to know what the perpetual growth rate of this Ethereum investment will be, because after 2030, of course, we're hoping that the value of our investment is going to continue appreciating. Now, the average S&P 500 inflation adjusted ROI has been around 8.29%. And when I say inflation adjusted, it means that the actual return on investment has been higher, but once you subtract the average amount of inflation, that's the real dollar amount. If we want to make this conservative, and if we assume a slight uptick in long-term inflation, then let's pencil in a 7% perpetual growth rate for Ethereum after 2030. And when we crunch all of these numbers, we can figure out that we need to have $1,100,000 invested by 2030 when we want to retire, so that we can spend that approximately $2.5 million over the next 30 years. Here's a nice, easy way to visualize this with this retirement calculator, and I'll actually explain why this is a relatively conservative estimate of how much money it would take to live in retirement. So you can see that if we start with $1.1 million and we're going to withdraw $6,800 per month for 30 years with that 7% per year perpetual growth rate, if these numbers prove to be correct, then not only would somebody be able to cover their expenses for that 30-year period, but at the end of it, there would still be almost $400,000 left. And you can see how if you started, for instance, with just 1 million instead of 1.1 million, it would make a dramatic difference, because that $100,000 invested over a long period of time would earn a significant amount of interest. But let's say that we only started with $1 million, then we would run out of money by year 25. So that last 5 years in retirement, we would be living in poverty. So now that we know what the target is, how much money we need to live in retirement, we can work backwards from there and try to figure out how many ETH it would take to retire by 2030. So I've got this spreadsheet here with 4 different possible scenarios. We've got the bear case, the base case, the bull case, and the super bull case. And that one is very interesting. As we've established, we're trying to get $1.1 million invested in Ethereum by 2030, and the current market cap of Ethereum as of the time of this recording is around $320 billion, but it fluctuates pretty regularly. So let's start with the bear case and work our way up. Now, if you're curious where I've pulled these future valuation numbers for in terms of what ETH could be worth by 2030, I've listed my sources down below here. With the bear case, I'm not actually pulling this from any sort of financial modeling, and I haven't seen anybody suggesting that it could be this bad. But what I've assumed in the worst case scenario is that Ethereum would match the average S&P 500 return, actually slightly below that at 7% per year. Now, I think this would be absolutely ridiculous because Ethereum has been gaining traction and growing at a significantly faster rate than probably most of the companies in the S&P 500, but that's beside the point. This is for the worst case scenario. In 2030, if there was a 7% per year growth between now and then, the total market cap for Ethereum would be around $550 billion, and with 120 million ETH outstanding, which is actually the current figure for today. However, that's also another way that I've factored in a conservative assumption into this, because Ethereum is actually turning out to be deflationary, and it will likely continue to be increasingly deflationary as we move forward. I've listed a source for that down here as well if you want to check that out. But anyways, so if we assume that there's a 0% issuance rate, meaning that there's no new Ethereum, but it also hasn't decreased, by 2030, the average price per ETH would be around $4,500. And if this situation came to pass, then the number of ETH tokens it would take to retire would be 240. And just for the sake of the argument, if you were to purchase 240 ETH at today's prices, that would cost you slightly more than $700,000. Now, obviously, I think that this is ridiculously lowballing it, and I would be shocked if that is where the price per ETH is at by 2030. So let's move on to the base case. Now, the source for the base case is from the Bankless podcast, and Bankless recently had Ryan Alice on, who is an executive investor in a crypto investing fund. And in this video, he ran through a discounted cash flow or DCF model that he prepared for Ethereum, which you can actually download, and I'll leave a link to this as well. Now, this DCF model is very thorough, and it includes also a number of relatively conservative projections, but according to this, the fair value per ETH today is actually between 10,000 and 12,000. And that's the fair market value today as judged by future potential cash flows. So if we pushed that out to 2030, which is, 8 years away, I think that Ryan Alice and the boys on Bankless would be shocked if that type of situation came to pass, because that would be very bearish according to their projections. But if we run with that as the base case scenario, that means that the market cap of Ethereum in 2030 would be 1.2 trillion, and with the same number of ETH outstanding, the price per ETH would be $10,000. If that situation came to pass, then you would only need 110 Ethereum to retire in 2030, and at today's prices, we're talking about around $325,000. But what about the bull case? Because now things start to get pretty interesting. So the bull case valuation model is coming from the same Bankless podcast and the same DCF model. And according to the model, by 2030, Ethereum could be generating over $200 billion in fees, the gas fees for doing transactions on the network. And if we applied, again, a relatively conservative PE multiple of 20 to that figure, which is well below the average S&P 500 PE multiple, then we're talking about a market cap of $4 trillion. And if the market cap of Ethereum in 2030 is $4 trillion, that means that the price per ETH would be 33,333. And if that situation came to pass, you would only need 33 ETH to retire, which costs less than $100,000 at today's prices. Okay, finally, the super bull scenario. Not Super Bowl, super bull. And let me just warn you that this scenario is ridiculously bullish. So the source for this valuation model comes from ARK Invest's Big Ideas 2022 report, which every year ARK Invest releases this report where they talk about the future of innovative, disruptive technologies. And this year, Ethereum was featured heavily. So according to Cathie Wood and ARK Invest, the market cap for Ethereum by 2030 could be $20 trillion. 20 trillion compared to today's current market cap of around 320 billion. Now, I know that might seem ridiculous, but it's not like this is just some random guy. This is a legitimate investment firm, a legitimate hedge fund run by a legendary investor, and they have some credibility. Now, I'm not saying that I necessarily believe that this would come to pass, but even if a fraction of that figure ended up being reality, then we're talking about some serious price per ETH. Anyways, if the market cap for Ethereum by 2030 is $20 trillion, that means that the price per ETH would be over 160,000, and at that price, you would only need 7 ETH to retire. So these are 4 possible scenarios of what Ethereum could be worth in 2030 and what that would mean in terms of the number of ETH that it would take to retire. I think that the bear and the super bull might be a little bit to the extremes, but it could end up somewhere in the middle. Now, there's a few other important points that I need to make here that could impact whether or not it's actually possible to retire off of Ethereum. First, I should stress again that I'm not literally suggesting that anybody should put all of their eggs, their retirement plans, and pin them on one single investment, especially not a cryptocurrency, which is notoriously volatile. This is meant as a thought experiment to see what it would actually take, which I thought would be interesting because of all of the incredibly bullish predictions that we're seeing out there for what ETH could be in the future. Also, I can already picture the comments of people saying that you didn't account for taxes, capital gains taxes. So here's a few points to that. First of all, you could invest in crypto through a tax-free account, which could be available depending on where you live. Secondly, you don't necessarily need to sell your ETH to cover your expenses, thus incurring capital gains taxes. For example, you could potentially borrow against the value of your Ethereum and then take that money in stable coins and live off of that, which in most jurisdictions would not be taxable income because you're taking a loan against an asset. Now, if you still really want to factor in taxes, I'm not going to do that because there's too many different jurisdictions and the tax rates in every single one is different. So I recommend downloading a copy of this spreadsheet, which will be linked down below in the description box, and then you can do whatever you want with it. You can change around the assumptions, you can put it in your own personal tax bracket and see how that works for you. And finally, the more you have invested at the time of retirement, the better. In some ways, this was a conservative approach to figuring out what Ethereum could be worth in 2030 and beyond, but in other ways, maybe not. And you never know, it could all go to zero. So with that in mind, if you're seriously planning retirement in 2030 or seriously thinking about investing in Ethereum, diversification never hurts, and the bigger the margin of error that you factor in for your own personal retirement calculations, the better. Thanks so much for watching. I hope you enjoyed this video. If you did, you might also like this one or this one. Thanks, and have a great day.